Thursday, November 29th, 2018, Monaco 64, home of alternative economics and contrarian views. This morning I want to talk about the Fed chairman's speech yesterday at the Economic Club of New York, where he admitted that the Fed's in the dark, and he used an analogy for it, and I'll touch upon it a bit later on after I look at what the markets are doing this morning. I also want to look specifically today at how the stock market has actually been in a bear market since the year 2000 in sound money or real money. Harry Dent, for example, he notes that he expects a collapse of the stock market and a collapse of gold, but he never realizes that back in 1929 and up until 1971, the dollar was as good as gold. So he's looking at the wrong numeraire, so to speak. Right now, the stock market is denominated in Federal Reserve notes, right? It's not denominated in a fixed value, fixed amount of value, like an ounce of gold. So we'll look at the Dow Gold ratio. So it's around 8:24 a.m. London time. We had a huge rally yesterday in the stock market related to Chairman Powell's speech, and I'll come to that in a minute. So what happened yesterday? Well, the stock market had its biggest move higher since March. The Dow was up 2.5% or 617 points. S&P was up 61 points or 2.3%. And the NASDAQ composite was up 2.95% or 208 points. I'll also look at the charts of both of all these indices when I go through the markets this morning. So let's start out with gold. Gold yesterday just traded below 1212 prior to the Fed chairman's speech, which that speech was at 2, I think it was it midday New York time. So at noon he started speaking. And before he spoke, the speech, the transcript was released. So the market started reacting even before he spoke. Gold did rally back up, but it's still stuck below 1230. Right now it's at 1226.20, up 5. The silver is at 1435, up 3 cents or 0.2%. Stock market. The Dow futures this morning is down 62 or 0.25%. Not surprising, just a little bit of profit taking, I guess. S&P is down 7.5 points or 0.25%, and the Nasdaq 100 future is down 20 at 68.93 or 0.25%. So let's quickly look at the charts here. The Dow, as you can see, rallied back above the 200-day moving average, which is the green line. But the 50-day is almost about to cross over below the 100-day. Right now, yesterday it settled at 25,614, and the 100-day was at 25,589. So we're very close to crossing below that, which is not positive at all. I think that rally we had yesterday, to me, that doesn't look like a bottom. The 23rd of November, that does not look like a bottom to me. So I would say we could continue a little higher for a few more days, but the market is going to turn back around, in my opinion. 200-day moving average right now is around 25,100. So that's a level to keep in mind below. The S&P and NASDAQ don't look as good as the Dow. Here's the S&P. We weren't even able to get back above the 200-day, which is at 2,761. The 50 is comfortably below the 100, and we seems, the 50 as well seems to be fast approaching the 200-day moving average, which is not a positive either. So as the old saying goes, I think yesterday was a dead cat bounce. I don't like to use that term that much, but that's what it looks like. The NASDAQ Composite Index, which is different from what I look, because only the NASDAQ 100 futures trades in the aftermarket, but they're fairly correlated. And as you can see here, the NASDAQ Composite looks even worse in terms of technicals. We've got now even the 50-day is crossed below the 200-day. It will be even worse when also the 100-day crosses below the 200-day. That will be like a definite death cross. And you can see that yesterday's rally is still way below those 3 moving averages. So again, looks just like a counter trend rally, and the trend definitely seems to be down. Currencies, yeah, the dollar did get hammered yesterday on Powell's comments, but this morning things are fairly quiet. Pound is at 128.22, unchanged. Euro 113.88, up 0.2%. Dollars down 1/3% against the yen, 113.26. Dollars at just below 6.94 against the yuan. So it's come off a little bit from the last few days. Natural gas yesterday was up about 10%. It's down about 2 right now, but it's at 461. So that's still something to keep an eye on, even though crude is quite still under pressure. WTI just above 50 here at 50.40, and Brent has come back below 60, is at 58.80. So let's have a look at the 10-year yield. Where is the 10-year yield? We are at 301. So it's actually down 5 this morning, which is quite surprising, I would say, because yesterday it closed at 306. Not sure what's going on there. So that's a surprise that the 10-year yield is down 5 here overnight. I guess could be related to the Fed, but the Fed chairman made the speech yesterday. If you think the Monaco 64 channel adds value to you and you'd like to contribute or help the channel, check the links below in the description. Bloomberg says Powell opens door to possible pullback in Fed rate hike. And why is that? Well, because Powell made a change of, terminology. He said that the neutral rate, that the Fed was just below the range of estimates for the neutral rate. And I think on October 3rd, he used the term that the Fed was a long way away from the neutral rate. So the market, he said on October, Bloomberg says here, Powell unnerved investors on October 3rd when he said in an unscripted comment that the Fed policy probably was a long way from neutral and might eventually have to turn restrictive. So he's changed that by saying that we're, now only a short, just below, which doesn't seem a long way. And the market took that as being, dovish, and that the Fed is not going to raise rates as much as they promised next year. They'll definitely raise rates in December on the 19th. What about being in the dark? Well, he used the analogy in the speech. I listened to the speech on Yahoo Finance, and he actually said that the Fed right now, because of all the policies that central banks, the unconventional policies of the last 10 years, that the analogy he used was that you come into your living room and it's dark, pitch black, and you don't know where anything is, and you have to walk very carefully not to bump into furniture and, at the risk of tripping or falling over. So he's admitting the Fed's in the dark. And I'm not surprised, because the concept of a central bank is anathema to the concept of free markets. Central banks are better in authoritarian communist system where they centralize everything and a few men decide where prices should be. And that's what central banks try to do in a supposed free market. And what does that do? It distorts everything. And that's why the Fed's in the dark right now. And that's why I don't think the Fed's out of the woods, or the markets are out of the woods, or the economy is out of the woods. And now to finish off, I like to look at the Dow in the currency of kings, in gold, because that's what the dollar was as good as until 1971. I know domestically it wasn't, but we need to look at the price of the Dow in dollars, and that's what maybe Mr. Dent should get his mind around. You know, in 1929, the Dow crashed. Gold didn't crash because gold was money, right? And that's why we need to look at the Dow in gold terms. And I've been speaking about that ratio recently. I've got a short-term chart here from the beginning of 2017, Dow gold ratio. So this is basically the Dow price in ounces of gold. How many ounces, ounces of gold it takes to buy a Dow. So as you can see here, I've got the 50, 100 and 200 day moving averages. The 50 is the blue, 100, the red is the 100, and the green is the 200. And you can see that just like against Federal Reserve notes, the Dow topped in October, beginning of October, and it's been correcting down against gold. It's holding the 200-day moving average there, quite amazing. But as you can see, the 50-day is starting to move below the 100-day. Right now, it's at the same level, 2106. So this is a good way to look at the Dow. I think, historically, bear markets bottom when that ratio gets near 1. So we're still a long way away. Of course, this has been totally manipulated by by the policies, the extraordinary policies, unconventional policies that Chairman Powell talked about yesterday. And that's why they're in the dark. And the other thing that I want to talk about is that, yes, in Federal Reserve notes, we are in a bull market in the Dow, but in real money, look at it, since 2000, we are in the bear market. Of course, we have had a rally since 2011 in the Dow gold ratio, or the Dow in real money. But it's still nowhere near, I think the high was somewhere around 46 or 47. It's covered there by the moving averages. That's a weekly moving averages now, 50, 100, and 200. So you can see we're holding the 50-week moving average. Yeah, so what's my conclusion from yesterday? Well, I've read a few of the headlines. Some people are saying that Powell was a masterstroke. He's given Trump what he wants, pull back a little bit from, the Fed hiking policy, get the stock market higher. But, and they say that now, if the stock market does crash, it's Trump's fault. I don't know. All I know is that the markets will do what they have to. I think this is this manipulation, all this funny money is going on for too long. Of course, we have to now wait for the G20 that starts tomorrow and see if there's a trade deal between the US and China. That could be the next trigger for the move lower. Who knows? So if you enjoyed this video, please give me a thumbs up, hit that like button. Also, subscribe to my channel if you haven't yet. You can also follow me on Steemit.com, DTube, and on Twitter. I'll talk to you later. Have a great day. Take care. Bye.